right. Welcome, guys. Welcome. Hopefully you guys can hear me completely fine. Let me know in the chat if you guys can hear me. So make sure that my audio is not choppy here and there. Okay. Hey Joe, what's up? Oh, 6 likes. What's up, guys? Welcome, welcome. Seems like more people are always joining in every single live. Just gotta make sure I do these consistently, huh? Perfect. Audio seems fine. All right. Okay. Well then, you guys should know, guys. Always hit that like button down below. It really helps out the YouTube algorithm, and most importantly, it really lets me know that you guys are enjoying the content, enjoying the actual technical analysis that I do for you guys on Tuesdays and on Thursdays or any type of the day, for any reason. But all right, so before we begin, make sure you guys read that description box down below, and if you guys haven't even read the title yet of the stream, make sure you guys do. But let's go ahead and take a look at what the markets are doing now. So today we had a significant move to the downside, so it was not really a good start to the month of August. However, if you go out on the weekly or on the monthly or just any of the higher time frames, things don't look too bad, right? So first of all, for the S&P 500, as you guys can clearly see here on the weekly time frame. Now, apologies about all of my lines here. TradingView tends to remember all the trend lines that I've drawn and all the levels that I've drawn from different time frames as well. So it kind of applies the daily and the hourly time frame levels that I've drawn onto the weekly as well. So again, don't be too confused by all of these lines. I will be going over specific levels only, so just concentrate on that. So first of all, if you guys remember on the S&P 500, especially if you guys are readers of the CFO Stream and Watch report, I specifically mentioned this specific level here, 532.50. I said that if we decide to close in that gap that we saw here back in, I believe, June 11th to June 12th that we made with that nice gap up, if we were to fully fill in that gap, we should be hitting around 536.50 or around 536, hence my yellow level here, 536.50. So if we did fill in that gap up, there is a chance that we can break below 536.50 and decide to move on lower. And if we decide to move lower, where can we find the pivot? Well, your answer is here, 532.50. Why 532.50? Well, that was the previous all-time high resistance area. Okay, so I believe back in, I think I mentioned this back in, actually no, I'm going a little too far out here. So let me just actually focus on this little area. So back in middle of May, so on this specific candlestick here, I specifically told you guys that 533.07 or the high of this candlestick is going to become important. And the next few weeks, it indeed became important as we decided to use this 533 area as a level of resistance or an area of resistance. But now, if you want to be a bit more specific, 532.50 has become the official line in the sand that buyers have to hold if we want to see a nice pivot heading into the rate cut in the month of September or the last month of Q3. So I'm not going to go a little bit into details about what I expect in the last month or the last end of Q3 and into the first few weeks, few days of Q4. I'll go over that in the next couple of weeks. But for now, just remember that we should be finding some sort of a pivot around 532.50 as we head into the first rate cut in September. Does that make sense? Right? So make sure you guys have your own levels at 536.50 and 532.50 on your S&P 500 charts, on your weekly and on your daily. Okay, and Joel, I will go ahead and check out AFRM once I'm done with all the tickers that I want to go over for tonight. So again, make sure you guys leave a like button, hit that like button down below if you guys are understanding what I'm telling you guys here. So what does that mean in terms of a percentage move down from the current all-time highs? All right, so all right, trace. Okay, oh, here we go. Let me actually use my ruler. So if we trace all the way back down to 532.50 from the current all-time highs, we're a little over 5%, right? Negative 5%. And if you guys also remember, for all my readers of the CFO Stream Watch report, I specifically talked about the fact that 532.50 could be a target if we decide to try to go down to that 5% textbook correction move. So it seems like based on today's price action, we're trying to aim for that goal of that 5% pullback. So again, we've been seeing some very whipsaw price action. I'll show you why in a couple of minutes. But the S&P 500 has been telling us that, hey, based on today's action, there could be further downside, especially as we got some negative reactions in the overall tech earnings that came out after hours today. Like for example, Snapchat, Amazon, and a plethora of other big tech stocks. Okay, I believe Apple ended up being flat on the day, but there's a chance that we can see a negative reaction tomorrow morning, pre-market or after market open as well. So based on that, right? Based on that, we have a lot of minor reasons to be looking for a continued move to the downside for the S&P 500 and eventually hit this previous all-time high level at 532.50. Now, lastly, okay, there's the last reason why we should be looking at this 532.50 level. Okay, make sure you guys are writing this down, or make sure you guys are remembering this. My weekly 21 SMA. Okay, so this weekly 21 SMA continues to curl up higher as slowly as possible, obviously, and it's about ready to retest this 532.50. And if you guys remember, back in April, we had another pretty textbook move down, okay, where we had a nice a little over 5% move to the downside, and we found our official pivot right at our weekly 21 SMA. So it wouldn't surprise me at this point, based on today's price action, that I would need to adjust my perspective for a measured move back to the weekly 21 SMA. Okay, so again, based on how today's price action was, it wouldn't surprise me that I would need to adjust my short to mid-term perspective in the markets to focus on the weekly 21 SMA. And that would obviously, again, be kind of a parallel move down, a percentage move down to this weekly 21 SMA, just like what we saw back in April. So again, I wouldn't be surprised if you have the similar, not even just similar, just parallel price action to the downside. I mean, we're even getting the same amount of a percentage move down from all-time highs, just like what we saw here back in April as well. So again, the market tends to rhyme, right? It doesn't exactly repeat in the most accurate way possible, but it tends to rhyme. And so that's exactly what we mean when we say it tends to rhyme, right? We tend to get a nice 5% move down, and then we get another 5% move down, right back to retest this weekly 21 SMA, just like what we saw back in April. And again, for all the CFO Stream Watch report readers, I've talked about this already, so you guys should already know what this is. And I told you guys there's a probability that this can occur, but we will obviously have to see going forward. But now, based on today's price action and kind of pricing in what we saw today, it would be ideal and would be smart to go back to that initial probability analysis that there is a chance that we can move back down to 532.50 and at the same time converge on top of this weekly and rising 21 SMA, okay, this light blue line. Okay, if you guys don't know what I'm saying, all right, just visually take a look at the weekly time frame for the S&P 500 and take a look at these 3 weekly candlesticks that make up most of the well, most of the month of April. Like, I would say more than half of April here, right? And so, or around half of April. Yeah, exactly half of April, right? So again, just take a look at this area and then just apply to right over here and you'll see what I mean. It busted rhyme? Yeah. Hey Hugo, what's up? I thought that's what Joel said here, but it's you, Hugo. Welcome guys, welcome. Hey, more people joining in, awesome. Make sure you guys smash that like button down below if you guys are understanding what I'm saying here. Alright. Okay, so that is it for the S&P 500. So make sure you guys are expanding your horizons on what could be possible for the next few weeks, especially as we head into the middle of August. All right, and I'll be a bit more specific on why that's important to my members and readers first in this upcoming CFO Stream and Watch report on Sunday, next Sunday, right, in a couple of days. But for everyone else, we'll be revealing what that is in the next couple of weeks. Okay, so let's go over QQQ now. So QQQ or NASDAQ is kind of the same story, right? We're kind of looking at the same thing here, but NASDAQ has been seeing a deeper correction. I believe we're officially over 10% from all-time highs today, if I'm not mistaken. So let's do that again. Okay. Oh no. We closed at negative 8%, almost 9%. However, if we do continue to move to the downside, if we do continue to see overall tech weakness, okay, there is a chance that we can retest the previous all-time high level sitting at 450 right here. Okay, so this is the official level that you need to be looking out for NASDAQ. All right, so let's make that orange as well, just like what we did with 436.50 on SPY. So if you guys remember, okay, one last time, I'll show you guys the weekly time frame for the S&P 500 for my chart. Okay, so excuse me, is that 436.50? 532.50 is what I meant, guys. 532.50 is that pivot level for the S&P 500. Make sure you guys remember that. Write it down or put it on your charts. Okay, 532.50. And then for QQQ, all right, I'm giving you guys some valuable levels that you guys should be looking out for in the next couple of weeks, especially as we head into the middle of August. All right, and so for QQQ, on the other hand, 450 is a huge level that you need to look out for. All right, so back in April, we'll do the same thing here that we did with the S&P 500, right? So QQQ had nearly an 8% correction, or if you want to be a bit more specific here, at the highs here, okay, there we go. We had an 8% move to the downside for NASDAQ. However, currently, right, it seems like from all-time highs here, we could be seeing a deeper corrective move to 450, which will be around almost negative 11% for NASDAQ, right? So again, based on today's price action, just like what we saw with the S&P 500, NASDAQ should continue to move to the downside, and based on the overall big tech earnings reactions after hours today, especially Amazon, there is a huge possibility that we can continue to move to the downside. All right, so Amazon will most likely be opening up with a nasty gap down, and it will also drag other big tech stocks to the downside as well, and overall moving NASDAQ to the downside, and most likely retesting this 450 previous all-time high resistance level. Okay, now, hey, thank you, Hugo. Thank you. Hey, guys, I can see your guys' likes there. Awesome. So, you know, it seems like, again, the markets are looking for a continuation of this current correction. And again, we need to adjust our perspectives based on what the market has been showing us, based on what the market is showing us, right? And what the market is giving us as data, right? We need to be able to become more flexible if you guys are a bit too biased on your own personal observances and based on your own technical analysis, right? So you need to become as flexible as possible. Like, for example, today was a great day to be flexible to pivot and switch your views on what the market can do in the next couple of days, the next couple of weeks. All right, and last but not least, okay, so again, NASDAQ, similar to the S&P 500, right? Let's take a look at VIX, the overall volatility index for the S&P 500. It's going to load here, right? So I did warn everyone that VIX can become a problem here, right? Especially as it's hanging out near that value of 20, right? So once we cleared 12 and 13, right? Once we immediately began to move over 12 and 13, we saw that toppish action, right? The topping price action from the NASDAQ and the S&P 500 indices starting to occur, right? So that happened around back in middle of July. And so far today, the fact that FOMC is finished and the fact that we have basically finished with most of the important earnings and the fact that we're now past the zenith point of earnings season, there is a chance that VIX can come back down, but audio sounds fuzzy? Okay. Hopefully sounds a little bit better. But the VIX here had a nice pop today, right? However, I am still thinking that even if VIX does pop further, especially into tomorrow or maybe into early next week, the fact that we have all basically finished all the binary events and binary catalysts, there is a chance that we can see a VIX crush, and that can offer an opportunity for the markets, right? For the markets to finally start basing out as we head into the middle of August. And that will become very important as we also head into the end of quarter 3 and the beginning of quarter 4. And again, I'll be telling all of my readers what that is in the CFO Stream Watch report that's coming out in the upcoming day of Sunday, right? So next week, the beginning of next week. So if you guys want to join and become a reader, make sure you guys DM me on Instagram at chartsfocus1 to grab your own copy for this week, and also become a reader for however long you guys want to be a reader for. Right, so you get 50% off for your first 30 months. And again, it's basically something that you guys can get if you guys choose to take action and just simply DM me on Instagram at chartsfocus1. That's it. All right, it's as simple as that. All right, so the VIX here again, let's get back into the topic at hand here. So VIX is definitely showing, again, warning signs. However, based on the fact that we have finished all of our catalysts, it wouldn't surprise me if we do see a crunch back down for the VIX and overall market vol seeing an overall crush, and we can see VIX coming back down slowly, okay, very, very slowly, back down below 15. Okay, 15 is kind of my baseline of when we should be really worrying about the overall markets showing some corrective signs, but we should be coming back down to retest this 15 value for the VIX, and at that point, we should be heading into the first rate cut in September, and we should continue lower and head back down to that 12 to 13 areas. All right. Hey, Hugo, you said great weekly reads comes in handy. Yes, that is very true. All right. So again, overall, based on what I've reviewed on the S&P 500, NASDAQ, and the volatility index for the S&P 500, you guys should understand that there is an increasing risk that we can't continue to move to the downside, and especially we can retest all those specific levels that I've just given out for the S&P 500 and NASDAQ. Okay, now let me go over a specific stock that has held up really well. It's an energy stock. So first of all, before I get into this NEE, this is also a very notorious name. Okay, and shout out to one of my friends that I met on Twitter for even pointing this out to me, NEE. But so energy, right, healthcare, and other defensive sectors were especially on fire today. And so it seems like we're still seeing some overall market breadth expansion, especially what we saw yesterday, right? We saw small cap and mid cap showing incredible strength, obviously not into the last 30 to 15 minutes of the day, but what was most important was that as we got a nice big rally to the top side, we saw the overall market breadth continuously expanding. And what does that mean? Well, underneath all of the heavily weighted stocks in the S&P 500, like again, the Magnificent 7 stocks, we were starting to see the rest of the 400 and something names in the S&P 500 basically getting a foothold and trying to catch up to the rest of the markets or the rest of the Magnificent 7 group stocks. Right? So finally, we're starting to see all these lagging stocks, hundreds of stocks, finally trying to catch up to the market. And so what we saw today was kind of that continuation of that strength, and we saw continuous breakouts in all of these lagging stocks like the energy, real estate sectors, healthcare, and other defensive stocks, specifically like what do you call it? LMT, right? NOC, right? All of these war-related stocks, right? And all of these just defensive stocks have been seeing extreme strength for the last couple of days, and I'm kind of wondering if all these defensive stocks were showing us early signs that the overall markets were about to correct, while the other 80% of the markets were beginning to show signs that it wants to finally catch up to the market, right? So, NOC, LMT, right? So basically what I'm trying to tell you guys is that all of these lagging sectors, lagging groups are really starting to show up here, right? They're starting to show up, and it seems like the money rotation into different sectors and different laggards and leaders and specific laggard groups are really starting to show up, right? And again, just like what we see here with LMT, it seems like the last couple of trading days, it may or may not have been showing signs and maybe giving us a little hints that there is going to be continued market correction, while names like these are going to continue to move on up higher. I mean, for example, if you take a look at the real estate sector itself, right, today, you wouldn't even understand that there was even a market correction. It might be if someone was just all in on XLRE, right, for example, right? Let's say XLRE was their only position. They wouldn't even know that there was a market correction, right? They wouldn't even know that the market moved over a percentage today, right? I think we ended up, what was it? I think we're down. Yeah, we're almost down negative 1.50% today, right? So, these specific sectors are showing strength, and that can be a huge hint as to whether or not this current corrective move to the downside can continue or not. And specifically, it's been telling us that yes, it can continue. And that's the reason why this NEE energy stock, right, Next Era energy stock, is looking pretty interesting with this breakout today, right? So first of all, it broke out of a massive bull flag here yesterday. Again, why did this break out yesterday? Well, mostly all the laggard groups had a nice pop to the upside, and NEE decided to become a participant, a beneficiary to that big pop for the overall laggard names and laggard sectors and laggard groups and laggard etc. So NEE continued to break out today. Nice red to green move, and tomorrow I expect to find some sort of an entry point around 78, or at least a nice red to green pop over today's high, or if you're going to talk about in tomorrow's perspective, so the previous high, which is the 78.42 price print, right? So if you do decide to get back over this previous high of the day at 78.42, then I will grab an entry point around 78.55 for extra confirmation. And it seems like NEE is heading straight for this $80 resistance level and eventually have a maximum price target to 83. Alright, so do what you guys want with this information, but NEE looks like a great beneficiary of that underlying movement that's occurring for the overall markets while the leaders continue to correct. Does that make sense, guys? Make sure you guys smash that like button down below if this is all making sense. All right, and that's the reason why I basically said in the description box down below that we're going to be looking into what's happening under the hood of the S&P 500 and just the overall markets. Okay, so there is this shift happening. All right, this market shift where the overall markets, literally, quite literally, the overall markets are starting to move up higher while the select group of leaders are continuously correcting to the downside. Does that make sense? Yes? No? Okay, I think I see you guys' yeah, I definitely see your guys' reactions in the chat. Awesome, awesome, awesome. Okay. Alright, Joel, let me go over A-firm. Alright, so that's basically it for what I want to talk about, what I specifically wanted to talk about, and kind of give you guys an understanding of what you guys should be understanding for the next couple of days and next couple of weeks. So A-firm, the infamous A-firm. So this one has been making a huge descending channel at this point. All right, so I first of all noted this descending channel back in, I think, like March or April, but this one has continued to fail. Right, it's continued to fail a potential breakout. So now I have to adjust my trend lines based on the current data that we have now. Yeah, Joe, so it could be a falling wedge. Same thing, right? Potato, potato. Potato, potato, whatever you guys call it. So, you guys get my gist here. So, A-firm, nice descending channel or falling wedge, if you guys prefer to see it that way. So this one, again, I don't know where this is gonna go. It desperately needs some sideways. Yes, this is some good consolidation to the downside, right? Obviously, a descending channel, good consolidation as it continues to move within the parameters set up by these two trend lines, right? However, from a weekly perspective, it looks very bearish. Right, we're underneath the weekly 50 SMA. That's never a good sign when we decide to lose a major long-term SMA on a higher time frame, like the weekly time frame. However, if we do decide to simply move sideways and continue to base out from this point onward, then A-firm can definitely become a name that I can watch again. However, right now, I'm not going to be looking for any breakouts as the market continues to, again, correct, right? And I've given you guys all the information as to why we can correct, and I gave you guys all the specific levels on the S&P 500 and NASDAQ. So make sure you guys go back to the beginning of this soon-to-be recording and watch it, right? For anyone who is just joining the stream, right? We're about to hit the 30-minute mark, so make sure you guys go back, okay, and watch the recording. Very, very important that you guys do that. Wow, we have a lot of people in here tonight. Seems like today's market moves have really hit people's nerves here. So yeah, it's cracking in here, literally. It's popping. So yeah, for A-firm, I mean, it's at a nice weekly support level now at 25.50. You can potentially have a crack at it, grabbing a nice potential pivot bounce entry at 25.50. But hey, you do you, right? All right, and last but not least, guys, you know, before I finish the stream here, make sure you guys go back to Tuesday's live stream. Right, I specifically talked about bonds. Right, bonds and IWM, and guess what? Bonds really did a good job today for me, since it quite literally acted as a hedge for me. So I had IWM as a core position, but bonds did extremely well today, and I didn't really have a bad day on my account. And you guys would have known that if you guys have watched my stream. I gotta kind of speak quietly here, right? Not let people know what happened on Tuesday. I'm trying to do my best to whisper, but my mic picks up everything. Right, so make sure you guys go back to that Tuesday live stream. Alright, it's on the channel, so make sure you guys go back. All you guys need to do is click a few buttons and you guys will arrive to that video. Right? So, Mike Sherm vibes, yeah. So, again, guys, remember the levels that are giving you guys for the S&P 500, specifically 536.50 and 532.50. Very, very easy levels. Okay, and last but not least, if you guys want to become a reader of the CFO Stream and Watch report, DM me on Instagram. My handle is @chartsfocus1, or you guys can just take a look at the description box down below, and you guys will know how to spell my username or my handle. Go on Instagram, DM me, and say that, hey, I want to join the CFO Stream and Watch report, and you guys will get 50% off for your first 30 days to the report, and you will get immediate access to the private CFO Discord community. Alright, so you guys will get that addition as well. So make sure you guys DM me. That's all you have to do. Say, hey, Andrew, I want to join. What can I do to join? And I'll send you guys that personalized 50% discount code, and you guys will be able to join tonight, right? By tonight, and become a reader of the report before the new report comes out next Sunday. And you guys will get immediate access to the private CFO Discord tonight. So again, you guys can join tonight. I always say this in my live streams now, right? You guys just need to take, you know, less than a minute to just go on Instagram, look up my handle, DM me, and there you go. Bam, you got it. Does that make sense, guys? Right, 50% off for your first 30 days. It will be worth it. Trust me. I'm just using the words of the readers, right? That's the reason why I'm saying trust me. Alright, so that is it for tonight, guys. Make sure you guys DM me, okay? But yeah, I will see you guys on Tuesday next week at the same time at 8:30 p.m. Pacific Standard Time or 11:30 p.m. Eastern Standard Time. Alright, so good luck tomorrow, and thank you so much for watching.